Alrighty, time for a weekly outlook. Hold on, let me move my stop real quick. Anyway, pretty action-packed ETH so far. Right, Moody's downgrade Friday after the close. Sold quite a bit after the close and continued to sell after the ETH open and dumped a little bit. Well, popped a little bit and then continued the dump. We actually traded deep, pretty significant amount of Friday's range actually. Quite surprised by how much of it we retraced, but sold off again, right? And back down into, with the case of NQ, last week's singles, and ES back into the lower end of the upper distribution. So that's gonna be the main focus this, at least to start the week. Now that we're trading down here, is what do we do up against with ES's case, this main distribution up here, last week's main distribution. Let me put Friday together, right? Pretty distinct point of control at 5908, with some shelves, some tapering going on at like 5919, 5889. We can sort of use this confluence or base some trades based off of what we're doing up against 5908, right? If we don't necessarily want to take an entry quite there. That's where it's a little different, right? NQ is trading below that 280s. 284 is actually like the low at it opened at. Popped, lost it, offered 280s, so pretty important level. I know I'm doing this late, but we had this morning, right, when we did our weekly outlook live. Haven't really changed too many of the levels. I think I changed this one 110s, right, the midpoint of last week's RTH range and this prior pivot high up here, right? So I got some fills like pretty darn near like bottom tick. I put some size on 130. Got some ads 113, 114, 115. Took some trims 155 and hoping I could take the rest up to 280s again. But anyway, with NQ's case, do we trade back into last week's upper distribution, arguably starting in the 220s, better up against 280s, or do we trade down into lower distribution, right, starting at around the 900s? We're quite a ways up, right? Quite a ways up. Seeing a lot of overbought ratings on shorter term breadth indicators and shorter term indicators, right? Doesn't mean we can't keep going higher, okay? You still got breadth, at least room. You got room on the, for at least if we're looking at stocks above the 200 day and 100 day, you got room on those. The shorter term ones are the ones that are sort of causing an issue, and I noted it last week of us potentially seeing smaller RTH ranges due to that, right? You're seeing a little bit of rotation in and out of different things. Index ranges become a little smaller, so I still think you're gonna continue seeing that, but we do have some added volatility because of the Moody's downgrade, right? So strictly levels. Obviously we sort of laid out the bigger picture, not the bigger picture, but the main idea. Okay, now what, right? So if we're gonna be below this upper distribution, we're gonna start with ES. Right, we still have, let me split this up really quick. We still have this massive gap, about 100 handles below Monday's lows, right? Monday we gapped up due to the deal with China and kind of got bid up against the upper end of this balance down here, right? So we had some swing longs down here, which were great. Did I expect to be initiating new swing longs after a huge gap up? No, but the setup presented itself, right? So this is probably what I'm going to look for more of this week. This sort of similar setup is we're up enough to the point where I've caught enough of this move to where I really don't feel like I need to, catch every inch of it. I feel like I can be, at least from my point of view, be a little bit more patient and sort of wait for those setups, sort of wait for, sort of each letter period to kind of like tell me what we're trying to do. All right, like in this case, it made it very, very clear. Right, opened above, traded back down to it, held it, held it, held it, made that excess, traded back above, and then got bid, right? So this looked very, very good up against this prior shelf down here, up here. So I'm going to be looking for more of those up against some of these levels, whether it's last week's point of control or maybe the upper end of last week's distribution, or whether you maybe it's the lower one, right? Like if I see that excess and we can close back over, establish some value above it, that's sort of the setup I'm going to be looking for. But levels are levels, so we'll be paying attention to some of these. Line in the sand for buyers. Obviously, like the short-term ones, just like, okay, what do we do up against this upper distribution, right? Whether it be this last pivot low, or the point of control, and then this upper end of the lower distribution. The bigger one, I would think, or what I'm going to make it, is this same low that we saw Monday, right? And it's not going to be just a level. I'm going to sort of treat it as the same way I did this one and say, okay, what are we going to do at the end of the session? Or what's the profile going to look like by the end of the session? Or, halfway through the day, what's the profile looking like up against that level? That's how I'm going to treat, sort of acceptance, maybe not try not to jump the gun, but sort of observe what happens up against those zones. So that'll be like my big line in the sand. I know we have the gap. We have this sort of shelf here, at least on this composite as well. Like, well, am I going to be tempted to be bid there? Probably. That's just the nature of how I am, but should I be? Maybe not. Still hesitant on, like, what do we do if this does trade a lot lower? I'll have to be a little bit more patient and sort of treat each of these levels below as like, okay, what do we do? What does the profile end up looking like on that session? And then what do we do up against, let's say, those levels the following session, right? That's where I get it. That's where I like to get aggressive, is I sort of pick up these larger time frame levels, get some, get a picture, get a better idea of the bigger picture. Once that session closes, I go ahead and say, okay, we did this off of this big important level. Now let's look at yesterday's session. What can I work with that we saw from yesterday's session that we can sort of use to try to catch this bigger picture idea? That's basically the framework for how I do things. Okay. So that's what I'll be looking for on ES. If this like trades back over this point of control, stays above, if stays over like 59.19, and more specifically trades back over like the 40s, 30s, I'm thinking we just go higher, right? Regardless of this Moody's downgrade. And those people on Twitter like telling you, like, the 2011 downgrade, we did this. The 2023 downgrade, we did this. Okay, I wasn't trading in the 2011 one. We did trade the 2023 one. Both of those are completely different circumstances as the one we're in now. You're in a different regime now, right? A macro regime, a completely different one. I don't think people understand that. If you just take a look at bonds, you take a look at the long end, look at what central banks have done and kind of screwed up. USA hasn't really screwed up yet, but completely different macro regime, and it's gonna be different. Okay. Do I know what's gonna happen? No, I'm just gonna keep playing levels and sort of what we do up against them. But for those that have been following me on Twitter and I guess in Discord, like, I've sort of laid out my macro ideas and sort of the bigger picture. Like, okay, where are we headed in terms of, okay, where's risk going to go, right? Where are we going to be risk off? And I still stand by that. I know I said risk off gold or short gold. The move worked, right, for about a week and a half, 2 weeks. I think I'm walking that back now and saying, like, okay, I think I want to be long metals, right? And I did start an FCX call position last week, to try to catch that. Am I long gold? No, but I did, covered most of my gold shorts and whatnot. Not trading that currently, but anyway, NQ. Same idea. It's just relatively weak, right? Because ES you're trading up here still, sort towards the lower end of last week's upper distribution. Now you're no man's land up against that midpoint of last week's at least RTH range, right? RTH composite up against that prior pivot high. But the main idea is going to be, okay, do we accept back into this upper range, right? Arguably starting 280s. At least where the shelf is, right? I know the pivot lows have been 230s overnight. But, well, 280s I think more important. And, you know, the upper end 440s, right? Or do we fail? We're already seeing, you know, failure up at 280s, at least our ETH. Do I care about that much? No, not too much, but offering 280s, right? If we can't get above that, we can't stay above that, becomes an issue. Probably trades back. You got a gap here, right? Not a gap, but open and drive higher. Only real, like, you don't have value built down here. You know, so I would expect this thing to just trade back into the 900s if we're not going to hold the mid and this prior pivot high. Right, so we are long off this. I know I took like half the position off, only because I wanted to go back green on the night. I'm trying to let runners run to 280s and possibly runners for even higher. So that'll be like the first thing I'm watching this week, right? Upper distribution or lower distribution. Which one do we accept into? And then sort of trying to catch the move, you know, to the opposite end of that, or, you know, if it gets up back in here, maybe some new highs. That's if we lose this level, which is very likely, can very not out of the picture, right? Who knows what the heck we do RTH. Not too many great levels below that I have. You know, already finding, at least last week, saw some bids up against the 760s, in which we started some swing longs, right, up against that shelf. But you have this massive gap, right? You got a couple shelves from the prior balance below here. You know, we can merge this one as well. Right, starting here prior to the gap fill, which if I'm strictly trading a profile, I'd be interested in, like trying to get long here, which I think I still would. But right, we still have that gap and sort of this like high volume node that comes in right at it. So, you know, if at any point we start to see some acceptance back below this, like, let's just call it 500, 20,500, I think it becomes a bit of an issue. You're going to see a pretty deep retracement back into this range, right? And I need to clean up some of these levels, but you know, pretty deep retracement. I'm talking, you know, couple 100 points below. I don't know if you want to be paying attention to all of these levels that I have here. I think I do need to clean this up, but these will just be sort of as like a reference point for me. But yeah, I would think you just trade back down to, let's say you lose 20,500. Probably this high volume node here, right down here, maybe even lower. I get a deeper retracement. Right, the only issue with this pullback down here, which I think is your low, is I know some people still don't think it's your low. You couldn't not stay below like the 20%, you know, pullback. Maybe it did on Qs, but on ES we did not stay below that bear market, or that the technical definition of a bear market level. Yeah, that's really what kickstarted this whole thing. But yeah, hard for me up here to tell you like where I want to see things at the end of this week. We're still going to be playing day to day. If they're decent setups, like let's say once we see something, you know, let's say the session closes and we see a decent looking profile up against some decent looking levels that we have, sure, I'll get swing long, swing short, whatever it may be. But you know, it's not like I'm a lot easier for me to be playing this day to day. That's all I'll say is play this day to day. Still got room on the breadth indicators to go a little higher. We want to. Can we get a pullback? Sure. You don't necessarily have to. There have been plenty of times, even in like recent history, where we've sort of gotten a similar situation, right? Like sort of stuff like down here or down here. You get the pop off the lows, and you sometimes you don't really pull back. You'll slow down for sure, and then sometimes build like a balance area. And kind of trade in it for a couple weeks, maybe a month. Sometimes you get a deeper pullback, such as this one, right? That'll retest some of that low, or get near that. Who knows what we do with this, right? Whether it's sideways, pullback, you know, a lot easier to be playing this day to day, and until we get a better reading on things or clear message from our president. But anyway, I'm gonna wrap it up there. I know it was a little bit yappy.